Hello, everybody, and welcome to our show today. Thanks for tuning in. A lot of you people are watching on YouTube Live, and if you are, like and subscribe our video if you like what we're going through today. And if you're listening on iTunes, leave us a quick review if you're liking what we're going through as well. So today we're going to be talking about how to use an SBA loan to actually buy a business. So maybe you don't have a business yet, or maybe you're looking to expand your business by buying some other businesses that have assets you need. Today, we're going to talk about how you can use an SBA loan, even tap into the business assets of the business you're looking to buy to actually use to purchase the business. So for those that don't know me, my name is Ty Crandall, and I'm the CEO here at Credit Suite. At Credit Suite, we help you get capital to grow your business. So we help you improve your fundability to meet lending requirements. We help you build business credit for your EIN that's not linked to your social, and access all different kinds of loans and credit lines. So today, if we can ever be of service, just let us know. 877-600-2487, info@creditsuite.com. So by the end of today's show, we're going to teach you what SBA is, how SBA works, the kind of financing SBA offers to buy businesses, what's required documentation-wise, basically everything you would need to know to get and use an SBA loan to purchase a business. So let's dive in. What does the SBA do? Well, SBA does not actually loan money. What they do is they set loan guidelines because they're basically guaranteeing the loans that the big conventional banks are offering. So the rates are more favorable and terms are more flexible than normal loans. So look, SBA loans are like the epitome of where everybody wants to be. And here's why. First of all, the terms are long. They're 10, 25, 30-year loan terms. So when it comes to financing, loan term matters more than rate, meaning if you get a longer term, that means a lot more to lowering your payment than a lower interest rate does. So what's so nice about SBA loans is you can get 10 to 30-year loan terms and get low rates, 8%, 7, 8, 9% type rates. But it's, again, important to notice that SBA doesn't lend money. What they're doing is going to the big banks, Bank of America, Wells Fargo, Chase, and they guarantee those loans. So as an example, you may get a loan through Bank of America for $100,000 for your business, and it's backed by SBA. Well, what SBA does is SBA guarantees that if you default on that loan, they will pay up to, let's say, 90% of that loan. So you have a $100,000 loan, you default on the whole thing. Bank of America's out 10 grand. SBA would give Bank of America 90 of that 100,000, and they would guarantee, for example, 90% of that loan. So they don't loan the money, they guarantee those loans. And so they're setting loan guidelines that must be adhered to be able to get approved so they can guarantee that loan. But the SBA, again, has their own rules when it comes to lending, and that's one of the things where SBA loans get a reputation for being so difficult to qualify for. Because inevitably what you're doing is you're qualifying for the bank's guidelines, in this example, Bank of America, and then you're also qualifying for SBA's guidelines. So it's like you got to qualify for two different organizations' guidelines, which is why it's a little bit more difficult to qualify. So let's talk about 7A loans. These are the popular loan type used for buying a business. You must demonstrate a need for the funds and have a sound business purpose in mind. This includes the purchase of a new business. That's what they describe. SBA says, look, you got to demonstrate you need to have a need for the funds, and you have to have a sound business purpose in mind. Well, if your business purpose and need is to buy another business, well, then there you go. Now, what 7A loans basically are is they're called working capital loans. And whenever you hear that term working capital, it just means general purpose. It means you can use them for almost anything. The opposite of that, for example, is an SBA 504 loan. A 504 loan really is just for the purchase of things like equipment or real estate. You can't just use it for general purposes like buying a business. So 7A is just their category that determines that you can use this money for multiple different reasons. So the current maximum interest rate ranges from about 7.5% to 10% on SBA loans. I said about 8 to 9%. That's about where we see people end up. It's determined by the size of the loan. If you have good credit, you may be able to negotiate a lower interest rate, but typically you'll be given that. So credit, risk, size of loan, all those type of things factor in to the interest rates you're going to pay with SBA or anybody else for that matter as well. Now, the maximum loan amount you're going to get is $5 million. I talk about SBA loans or banks that offer them all the time. When I'm talking about them, I always give a loan amount range, and it always ends at $5 million because that's the cap for these 7A loans. Maximum interest rate is about 9.75%. Term is 10 to 25 years. We talked about that need for longer term to keep payments low. And the percentage guaranteed 75 to 80%. That means that's what SBA will guarantee to pay back if you default, and the bank's responsible for the other 15 to 25%. SBA charges a guarantee fee of 0 to 3.75%. So you need to know this. because a lot of people think that the fees on SBA loans are cheap. That's not necessarily true. You can pay 5 to 7 points or sometimes more on SBA loans because SBA has a guarantee fee. The bank has a fee. So there's all these fees and points associated with it. They're all rolled into the loan, but just keep in mind that you can't expect SBA loans to not have fees rolled in. You're going to oftentimes see that they're going to be 5, even 7% of total fees rolled into these loans. So there are 5 qualifications that primarily determine whether or not you get approved. I wanted to break all their stuff down to just a handful to make it easy to understand what it takes to get approved. Personal credit score, it must be good, okay? You need to have excellent credit, and we might dive into this in some future slides. We've seen people denied with 780 credit scores because they had one late payment on a major bank account. I think that late payment was with Bank of America. So your personal credit has to be good. You don't really want to have any derogatory items on the credit report. If you look at SBA's website, they will say that you should address any blemishes on your credit report before applying. So the word blemishes to me is not severe stuff. That's even minor stuff. So when SBA says you need to address blemishes before even applying, they're basically telling you anything that's derogatory outside of maybe some medical collections you probably need to address. Okay, down payment as well, what you're putting down. And again, the nice thing here is that you're able to actually use the businesses, that assets that you're buying to sometimes cover all or most of your down payment. Collateral, again, that is the assets. So the assets of the business you're borrowing can also be used as the collateral. Well, the most common kind of collateral for SBA loans is account receivables, meaning the business has people, their customers that owe them money that are paying on terms. Industry experience. If you are me, I'm in financial services. I've been in financial services for 18 years. So if I am going to buy a dry cleaner, then I'm probably not going to qualify for that SBA loan because I have no experience running dry cleaners. But if I'm to buy another business in the financial services arena, then chances are good that I'm going to meet the industry experience requirements because I have almost 2 decades of experience in financial services. This is why they ask for resumes with SBA loans. They want to make sure you have the experience to run the business that you're buying or getting a loan for, and the financial strength of the business you're buying. Basically, is it positive cash flow? Is it negative cash flow? Is it losing money, or is it gain, or is it making profit? You know, they're looking for the financial health of the business. If the business is bleeding money, then that's a problem. What SBA really looks for is that the business is making enough money and profits to cover whatever the payments are on the loan and then some. They're basically just making sure that the business has enough money to pay back the loan you're obtaining. You're going to need a credit score of at least 680. Now, again, I've told you we've seen 780 credit scores denied. It's not credit score based. It's credit based. So what it means is if you have a 680 credit score, you probably don't have a lot of derogatory items. Your utilization makes sense, et cetera, et cetera. They're just looking for that good credit profile. 10 to 20% down, sometimes as much as 30% down in the business, and sometimes you can get that from the business assets itself. You must have 3 to 5 years of direct industry experience at the managerial level or higher in the industry that you're looking for. So let's dive in and talk about this stuff a little bit more. So you want to be able to submit at least 10% down payment before receiving the funds. So for loans of $350,000 or higher, you may also have to secure the loan with some collateral. Look, I can tell you SBA loans under $350,000 aren't easy. But if you're an established business with pretty good personal credit, these aren't as difficult to get as you may think. We knock these out quite often, $325,000 to $350,000 loans. We knocked one out for our client the other day. We have all the final steps in, closing for another client right now, as a matter of fact. Much easier when you're under this $350,000 mark, just so you know. If you don't have enough business collateral, offering personal collateral will help you qualify. I once stood on stage and showed SBA's actual underwriting guidelines. An SBA requires the bank to take every business asset that you have as collateral, and if the asset's not enough to cover the actual debt, they go after your personal assets as well. So let me give you an example. Okay, the client that we're getting ready to close the loan for, this is a great example of what you may run into. Okay, the client that we're getting ready to close the loan for had account receivables over $1 million, which means their customers are paying them on terms, and of all the money that's outstanding, it's over $1 million, way more than the $325,000 loan amount the business is looking for. So no personal assets were needed. But what's interesting is that the owner had some negative information on their LexisNexis credit report, not on their personal credit report. So they pulled a LexisNexis credit report, saw judgments, and then because the judgments were there, they asked for the home to be used as collateral. Now, what we were able to do was to go in and have the judgments paid, okay, negotiated and paid, and then they removed the home being used as collateral still. So the bottom line is, on a normal loan where the risk isn't too great, if the business assets can oftentimes cover what's needed. They don't even need personal assets as collateral. But we've seen in examples like that where the risk is higher, that they may even grab the personal house as an actual collateral, or they may need it if you don't have enough business assets to serve as collateral either. This is one of the only cases I've ever seen this. Of all the business loans we work with every legitimate business loan that exists. SBA is the only one I've ever seen that uses a personal home as collateral for a debt. Not to say others don't, but it's just very uncommon. So factors considered with reference to collateral include real estate is very attractive, whether it's personal or business. Like I just mentioned, home. If you owned the building you're in, that would be what they would want, as it's likely to retain its value. Okay, and if you don't have real estate to pledge as collateral, well, you may be able to pledge equipment, vehicles, account receivables, and other business or personal assets as collateral instead. Or 401k, stocks. Anything like that you have a value may be pledged as collateral. SBA wants all the business assets as collateral, and they would also like the personal assets as collateral if it's not enough to cover the actual loan with the business assets. The value of your collateral is discounted, meaning if your vehicle is worth $20,000, they don't care about what it's worth if you retail it. They want to know what's called a fire sale value. A fire sale value is if they have to take that car back to get their loan back, their loan paid back, how fast could they sell it? They don't want to put it on Auto Trader and have it sitting there for months. They want to be able to sell this super quick. So they're only going to give you like a wholesale left book type value for that. If you have any car experience, you know what I'm saying. They're looking for the wholesale value of what that collateral is worth. So lenders often discount that value, again, because they're actually taking into account, they're liquidating that asset, the time and cost to do so. Okay, so the financial strength of the business you're buying, operational history. Well, typically minimal time and business requirements, 2 to 5 years. And here's why. For an SBA loan, they're looking for 3 years worth of tax returns. So, and actually it's 2 to 3 years, but almost all banks want 3 years tax returns because SBA's minimum is 2 years. So a lot of banks, you can't even get an SBA loan unless you've been open for 2 to 3 years because they need tax returns for 2 to 3 years. And they're going to want tax returns for 2 to 3 years for the business that you're buying. That's why you must have that time and business requirement. They got to demonstrate profitability. Remember, the financials need to show the business is profitable because the number one concern of anybody ever lending you money, period, is whether or not you will repay them. It's all they care about. All the documentation, all the questions that are asked, it all boils down to only one thing that any lender cares about: your likelihood of repayment to them. If you have a business you're buying that's losing money, well, then how are you supposed to then pay the SBA loan when the business isn't even able to afford its own debts right now, let alone the new debt that you're taking on of the SBA loan? But think of it like this: if you're buying a business that's profitable, so the SBA loan payment's $4,000, which is pretty common on a $325,000 loan. So the SBA loan's payment's $4,000 and the business is profiting $30,000 a month. Well, then SBA is more than comfortable with that because their payment's $4,000. There's $30,000 in profits. There's more than enough profits to cover their expense of paying back that SBA loan. Okay, so growing or stable revenues. Business revenues must be stable or increasing. SBA and all lenders want to see this. What they don't want to see is that you're coming to get money when you're desperate. They want to see the business is growing. They want to see the revenues increasing month to month. They want to see profits increasing month to month. Maybe if all those factors aren't showing an increase, they want to see growth. They want to see that the business is growing, not losing steam and losing value. They don't want you to get this money and use it to try to save the business. They want you to get the money and try to use it to continue to grow the business at a faster or bigger pace. Ability to repay, we talked about this again. They're looking for your ability to pay back that amount of money. So the business should generally have a debt service ratio of at least 1.25, which means that whatever debt you have, whatever the amount of money that you have to have that 25% plus buffer left in there so they know that there's enough money left over to pay those debts. So what documentation are you going to need? Well, you're going to need a purchase agreement, which shows the final price of the business, what's being purchased, the stocks or assets or intellectual property or software, whatever it may be. Requirements for the seller and buyer at closing. Okay, so what's required for both at the closing. effective date of ownership transfer, they're going to look for too, okay, when that's going to transfer to you. Okay, if the seller will assist with the transition, and if so, the term. So this is very big. When you buy a business, they always like to know that that owner is going to stick with the business for months or maybe even years, continue to be part to make sure that there's a smooth transition between owners for obvious reasons, right? So if somebody were to come in and buy Credit Suite, well, we have a whole team of 80 team members here. They're going to want to know that the people that those team members are used to reporting to are still going to stay in the organization to help the transition of the new management team to come in. And then that way, it's a smooth transition and they don't have team members bailing and everybody leaving because they're freaked out that those managers or owners are no longer there. So they want to make sure that that seller is going to assist with that transition. Responsibility for pre-existing liabilities is going to have to be mapped out too. There's debts, there's liability. Who's responsible for those? New owner or existing owner. You must provide additional financial documents concerning the business. 3 years tax returns. They're going to ask for business and personal. As a matter of fact, they're going to ask for business tax returns for any business that you own. So if you're buying a business and you owe 4 other businesses, they're probably going to want tax returns for all 4 of your other businesses, as well as your personal and the business tax returns. Year-to-date profit and loss statement, balance sheet, and cash flow statements. All this shows money on hand. It shows how the business is managing its cash flow. Again, all you have to think about is all of this. Every single thing they ever ask for all boils down to them just trying to figure out your ability to pay, right? So your tax returns reflect how much money you have, how much money the business has, how much money you have personally. The year-to-date profit and loss statement, are you losing money or gaining it? How much money do you have on hand? The balance sheet, the cash flow statements, how are you managing cash flow? Okay, information on outstanding business debts, including, again, who those are going to go to, new owner or existing. Information on any long-term contracts. They're also going to ask for any third-party contracts you have. So any agreements you have with third parties, they're going to want those contracts as well. And they're also going to want to provide additional financial documentation for the business. Complete list of business assets. All the assets the business has. We understand why this is because they're going to take that as collateral. Rent rolls if the business has tenants. Business lease. If you don't own the building, they're going to want the lease of the building you do own. And if your lease is about to expire, they're going to want proof of the extension too. The one we're about ready to close, the lease was about to expire. They wanted proof that the lease was going to be extended. They want to know the business has a physical home of wherever it's actually going. Okay, organizational documents, incorporation documents, business licenses, et cetera, they're going to ask for. Not necessarily always a business plan. Matter of fact, a lot of the loans we close don't have business plans. They just don't have the business plans mapped out. And that's okay because they've already shown a history of creating revenues, of creating profits, of creating steady growth. So I put this on here as a possibility, but it's not a necessity. A lot of the loans that we close under 350 don't need the business plan. If you're looking for a larger sum of money and looking above 350,000, you could probably plan on putting together and needing a business plan. Okay, while there could be some differences, an application typically includes an executive summary, business profile, ownership breakdown. Anybody that owns more than 20% of the business is going to be asked to sign as a guarantor, just so you know that. So anybody that owns ownership or has that ownership is going to need to be a guarantor. Management experience, we talked about that. Breakdown of how the funds are going to be used. In this case, it's being used by the business. Statement of how the loan will be repaid, right? How are you going to repay the loan? How are you going to get the money to repay the loan? Well, that's easy if you're saying, look, I'm buying the business is generating $30,000 in profit. The SBA loan payment's $4,000. We're going to use the $30,000 in profit to be able to pay back that loan. Okay, so SBA forms that you're going to need. A borrower information form. It's called 1919 Guide, used for all SBA 7A loans. Here's where you provide basic borrower information. The previous version, Form 4, is no longer in use. So basically, this is just like an application form. It's just their form. It's just their form number that they use to get all of your information. SBA has a great checklist on their website that maps out this amongst many other things. Okay, an SBA Form 912, this is the statement of personal history. This form is used to evaluate your character. Here's a very, very interesting story. On one of these SBA loans we closed, they have this statement right here, the statement of personal history. The person filled out and said that, hey, I've never been convicted of any felonies or misdemeanors, and that was it. Well, they came back after looking at like a LexisNexis report. It wasn't even on LexisNexis. I don't know where they got this data from. And they came back and said there's 2 misdemeanors. These misdemeanors were over 20 years ago. They were like 25 years old. 2 misdemeanors, 25 years old. And they said, why did you say that you never had misdemeanors when you had these 2? And it's interesting because we went to the applicant, the owner, and the owner goes, I don't even know what you're talking about. Like, I don't remember these from 25 years ago. The owner had to pull a background check on themselves to even try to figure out and remind them of what the misdemeanors were even for, because they were 25 years old. And I'm still trying to figure out how they even knew that, because it wasn't on the person's LexisNexis credit report. So this statement of personal history is a big deal. In that case, that person had to write a letter of explanation, save face, and they did write that letter of explanation and said, look, these were 25 years ago. I don't even remember this. But as you can see, like, I've had a completely clean record ever since. I was just like a wild and crazy kid at that point in time. So again, they're really going to dive into that and check this information against their own places and sources like LexisNexis. Okay, they're going to need, again, the personal financial statement. They're going to want to know your assets, your liabilities, that type of stuff. This form is used to assess the personal financial standing of you, your spouse, anyone who's a proprietor of the business. If you're married, they're going to want that personal financial statement signed off on by your spouse as well. Okay, they've got a Form 159, a fee disclosure form and compensation agreement. Only needed if you hired a broker to help you with the SBA loan. Talks about how much money they're getting paid. They can't make a lot of money. I think SBA loan brokers can only make 1%, maybe 2% max. Shows how much you paid them and the services they provided. Okay, so here's some sources for SBA. Now, of course, we can always help you with SBA loans. You can see on the bottom of our web of my slides, creditsuite.com/get funding. We have tons of sources with SBA that can help with SBA loans. And the reason we have a lot of sources is that some deal with higher risk, some don't deal with higher risk. Some will help with industries that are higher risk, some won't. So we've got a bunch of SBA lenders because they help with all different kinds of scenarios. But Lendio, SmartBiz, Wells Fargo, Bank of America, JP Morgan Chase, these are some of the ones that you can go through. I personally recommend you always use a loan broker. Always use a loan broker. And the reason I say that is because loan brokers are the buffer in between you and the bank. Loan brokers are the ones that you tell everything to, right? You tell everything to your loan broker. And then your loan broker says, never say that again. Don't tell the lender that. We need to tell the lender this. They control the information that goes forward. And then that way they can keep you from giving information you probably shouldn't be giving or that could jeopardize the loan to the actual lender. Okay, you may be able to qualify with South End Capital. They're another lender if the business you're looking to buy is profitable. You have a 20% cash down payment. Now, again, I said it may be possible to use some assets of the business as your down payment, but it may not be. Some sources, you need to accept the fact that you may need to come into this with a down payment, especially if the business doesn't have a ton of assets. Okay, credit score of 680. And again, South End Capital provides long-term SBA loans of up to $5 million. A lot of sources do, guys. We work with over 1,000 lenders, and a lot of them offer SBA loans. I'm just giving you some direct source. And just know that's just how we are. We're really big on transparency, so I have no problem telling you, hey, look, here's the source and some of the sources that can help you. You also should know that we don't charge any kind of fees on our loans, okay? So whenever you're working with us, you're going to have banks that will charge you fees, but we're not really charging fees. So you have our help at basically no cost to figure out which of these lenders works for you. So the SBA, remember, sets the loan guidelines, not lend the money. Okay, to buy a business, the most ideal loan is a 7A. It's really all that's going to work because their others aren't meant for the purpose of buying businesses. You're going to need 680. You're going to need pretty good credit. You're going to need money down. You need to think about at least having 10% down. You may be able to get around that. But again, you should at least keep that in mind that might be how much money you have to supply or raise. Loans of $350,000 or more are going to have to be secured with collateral. Under $350,000 oftentimes as well. But over $350,000, you might even see that they may come after personal assets as collateral. You also have to show relevant business experience, the managerial level higher. SBA loans mean a lot of paperwork, no exception, because again, they're looking at all different aspects to make sure you have enough money to pay back that loan. Application forms are extremely detailed as well. And I talked about the importance of making sure that those are actually accurate because, again, you may have to account for any inaccuracies, even if it's things that you don't remember. Like in that example I gave you where somebody had misdemeanors from almost 25 years ago. So remember, if you'd like to get access to every legitimate funding program in one place, we can help you with that. That's what we do at Credit Suite. We just believe it's so difficult to get loans because there's so many different kinds of loans and sources that most business owners have no idea where to go to. So what we do is we pull all of these sources together in one. Over 1,000 lenders, every legitimate funding source. We vet them all. We find the best of the best in each program. and make them all available to you. So that way you could talk to one of our finance officers, and our finance officers can help you qualify for a bunch of different kind of financing, get the best terms, do all the negotiation, do everything for you. And again, we don't even charge you a fee to do that. Okay, you pay us no fees ever, and you use our loan volume to get lower rates. You might do an SBA loan once every 5 years, once in your lifetime. With us, we do these all the time. So because of that, we have really good relationships with the banks we do business with, and it's then that gives us the ability to get exceptions, to get lower rates, fees, which we pass on to you. We also have a business blueprint. If you're ever looking for a business SBA loan for yourself, your business, well, we help you get all the money you can get now. We help you qualify for term loans next and qualify for SBA loans. We help you understand what it takes to qualify and then meet those requirements while you're getting money, so you will be able to qualify for an SBA loan. And it's basically our strategies that you should never need to look for money again. All funding in one place, a whole finance team to help you get money whenever you need it. It just makes it easy for you to get the money you need when you need it. So hopefully you got a lot of good information and you know all the specifics, the qualification for an SBA loan, and everything you need to know to get an SBA loan to buy a business. If you'd like more information, go to creditsuite.com, top right of our page, access our social media links. There you can find that we go live on YouTube and Facebook weekly. We have a podcast that you can listen on the go. Half of our podcasts are interviews with really smart people that teach really cool things. People that I follow their training and do side businesses and make really good money with what they teach on my own podcast, which is awesome about being a podcaster. And there's all kinds of other things that we have on Instagram, on Twitter daily with tips that help you get capital for your business. And of course, if we can help, go to creditsuite.com/get funding to get approved. Give us a ring at 877-600-2487. Send us an email at info@creditsuite.com, and we'll be more than happy to talk to you about all the financing we can help you get now. Thank you so much for tuning in again. If you are watching on YouTube, go ahead and click that like button and subscribe. You'll get notified every week when we go live. And if you're listening on iTunes, go ahead, throw us out a review. We would love that if you would give us some feedback to let us know how we're doing. And that way we can continue to get better and continue to deliver you good, valuable content. Thanks, everybody. Have a great day.